would like to call this meeting to order. Thank you for joining us during our weekly hybrid MLS breakfast meetings. My name is William Wei, and I am your October program chair. Hey, here's a little about me. I am from Pinnacle Real Estate Group. I've been with this board since 2018. It is my third year as a director of this association. So thank you very much for having me. And now, please help me welcome our moderator for today, Mr. Brandon Zabrensky with First American NHD. He will be introducing our panelists. Take it away, please.
Good morning, everyone. All right, everyone. Who's ready for the last panel of the year? We are going to start this party off, and just as a caveat, if anyone is disruptive today, we have a paddle with Buck in the back, and all right, so we're going to start off. Chris, if you can introduce yourself and give us your past history.
Yeah.
All right.
Hi, Chris Haun, everyone. I'm with Guild Mortgage Company. I've been doing loans for 35 years now, so for quite a bit of time. Do just residential 1 to 4, anything that's residential, purchase, refi, second mortgages, HELOCs, all of that stuff. Pleasure to be here today.
I'm Judy Chow. I've been doing loan, I would say over 30 years. I don't want to say how many years. And I'm really happy to be here today.
My name is Cosmo Sanchez. You see my picture right there? That was 10 years ago when I took that picture. Okay, here's a fun fact. I'm wearing the same suit, guys. Look at that suit. So you know I take care of my clothing, like when I take care of my business. But I've been, I do a lot of what everybody else does here: residential, traditional lending, non-traditional lending, bank statement program, DSCR programs, you name it.
Morning. Well, that suit there, that was a while back ago. So. But anyway, my name is Mario Manzanilla, Rate One Financial. I've been doing regular loans for a long time, but in the last 8 years or so, focusing on reverse mortgages, and I will explain why. There is a reason for that, and I'm happy to be here and share that information to all of you.
Awesome. Thanks, Mario. And so real quick, I'm going to go through the questions, but as you guys can see, the title of today's presentation is What Goes Up Must Come Down. So this is our lender update for the end of the year. And as you guys know, at the beginning of the year, we typically do a lender update. We all are hoping and praying that rates will come down and business will keep generating more, but they're going to give you all the information that you need to help you and your clients be successful. So we're going to start off with Chris. So why don't mortgage rates drop when the Fed cuts interest rates?
Okay, so this is a different setup for us here, so I'm glad the fruit wasn't passed out first. Might have got that thrown up here, but so there's a huge misconception out there, especially I see it even in the media, that whenever the Feds are going to cut rates, everyone gets excited and thinks, oh, mortgage rates are going to drop. They don't. The Feds cut the federal funds rate, which is a very short-term overnight bank lending rate. It has nothing to do with what mortgages are tied to. Mortgages are tied to longer securities of like 30-year bonds and treasuries. Most often we're looking at the 10-year treasury to see an idea of what direction rates are going, but we look at mortgage-backed securities for the exact pricing adjustments daily. Interest rates tend to be somewhere around a range of 1.5 to 2.5 above the 10-year treasury. So that's why you're seeing stuff maybe anywhere from 5 3/4 to 6.5, something like that, depending on equity and other things. But when they cut that short-term rate, everyone's hoping for interest rates to drop. And we actually had 4 midday price changes for the worst that day. All the rate cut happens ahead of that. So as soon as the news comes out that the Feds are going to cut rates, and they were pretty sure on August 22nd, when the Feds talked, that was going to be the move. So with almost 100% certainty, that's the day the rates improved a lot. By the time the Feds actually cut it, it got a little bit worse. But it's going to trend further down. There's going to be other things that both of us or we'll talk about in the next few questions. But that's it. Short-term rates versus long-term securities. So that's why they did not come down when the Feds cut.
Awesome. Thanks, Chris. All right, Judy, what are the interest rates and housing forecasts from NAMB conference and Crystal Ball Award winner?
Eric, if you know, he's one of the forecast person. So I went to a hour-and-a-half conference that he presented, but I'll try to reduce to 2 minutes. So pay attention. It's going to help you make money. Brendan said we have goldfish attention. 6 seconds, but try to stay in tune for 2 minutes. Okay. Basically, the rate, I just cut it short. The rate by end of this year on a 30-year fix should be 5.75. So you know it's coming down, which is good news.
Brendan.
And by 2026 by 2026 should be 5.5. So we should watch that. That's a forecast. The second thing that's important is that housing, we're short of housing. There are a lot of buyers who are on the sideline. They're waiting for the rate to drop, buy. But we're short of housing, so once the rate drop, you know, they're coming out. In fact, I did a couple of pre-approval last 2 weeks. One yesterday, 11 offers. They didn't get it at full price. I did one for Costa Mesa, 21 offers. Didn't get it at above full price. So you know, nice house are really have high demand. So if you want to make money, tell your buyer to buy now. Don't wait until the rate drop and the house will go up. That is true. So give that example. What is it called? Marry the house and rent the rate. Rent the rate. Okay, just give you a real fast.
I like that. Marry the house, date the
Buying
rate.
$700,000 home, borrowing 500,000. If the rate is 6% versus it goes down to 5.75, the monthly payment difference probably about $180. So, but if the house goes up like year to year, 3.5%, it's gonna go up 28,000. So you didn't save at all. In fact, you're short of 22,000 or so. So the important thing is tell your buyer to buy now. Don't wait. When the rate drop, this house is gonna go up. It's gonna go up anyway, 3.5% forecast. Okay, so that's it. Thank you.
Awesome. Thanks, Judy. Okay, Cosmo. Real estate sales nationwide are at an all-time low. How can realtors and lenders team up in today's challenging market?
Okay, I think our jobs from all the affiliates here, all the vendors, our jobs, the real estate agent, the lender job are the most interchangeable jobs, right? What do I mean by that? Is that so many people on social media, my friends and family, or in my conversations, they reach out to me and say, Cosmo, can you show me a property in the city of San Gabriel? Or Cosmo, how much you think my property is worth? In which I tell them, I'm not a real estate agent, right? I'm a lender, I don't have my license. And the same thing happens to you guys, right? Maybe they tell you guys, hey, you know what? I need down payment assistance, my taxes, I don't know if I'm gonna qualify, what's the rate? And then during that time, you refer them to me, right? So I think in this challenging market, because we all know, just like Judy alluded to, everybody did, that sales are down. So what I have found to really help out is going back to the stuff that we did in the beginning, right? Which is what? Open houses, being part of Chamber of Commerce, meeting business owners, meeting with clients one-on-one, either at your office or at a coffee shop, having those buyer consultations. So I think those are the things that are gonna help us in this tough market. Also, social media, doing videos, that's another good thing that we could do right now, right? Just a picture of us saying, hey guys, any real estate questions? Here to help.
Awesome. Thanks, Cosmo. Okay, Mario, what is a reverse mortgage and what are the benefits of it?
Great, that's a great question. There is a lot of misunderstanding about what reverse mortgages are. And I would go just a little bit. First and foremost, I want to share something from the US Census Bureau. Baby boomer generation, 1946 to 1964. You guys know who they are. 11,000 per day will turn 62 years old for the next 10 years. 25 million will rely on Social Security for 90% of their income. You know some people like that. Millions will be unable meet financial needs when they retire. And this already happened. You already know some people like that. So really, a reverse mortgage is really not, they call it reverse, but the technical name is home equity conversion mortgage. So what is that? It's a special type of mortgage. It's really a retirement tool, a retirement tool. Okay, it's a mortgage that enables homeowners 62 age or older to tap into their equity in their home. That's basically with no mortgage payments. That's the key. Now, I heard a long time ago, and I'll close with this one, like this guy that was doing a seminar talking about mortgages. He said, there are two types of mortgages. He was talking about reverse mortgage. The regular mortgage, you pay until you die. And the reverse mortgage, you die and then you pay. So you choose.
Who's gonna pay it?
Awesome. All right, so Chris, why haven't mortgage rates dropped yet?
That's a great question. Yeah, the question of the hour, we all want them to drop. So the biggest driver of mortgage rates is inflation and the perception of what inflation is doing. So we were up as high as 9% at one point. So rates got really bad, like 2022, we started to hit those ugly levels, and they really haven't corrected much. We'll have a correction period and then they'll go right back up. Yeah, it's been terrible. So what are some of the things that are causing that? So the biggest one is inflation has dropped about 3% now, but the Feds have a target of 2%. They want to see 2%. That's what they've always wanted. That's their conservative number. I don't know if 2 is the number we should have anymore. Maybe it's higher. But because of inflation staying up, most of it has come down to points where the markets are getting very comfortable with the level of inflation. The last piece of that puzzle that's yet to improve for mortgages to get better is the job part of it. So anytime we see a lot of jobs created, like that's good for the economy, but not great for interest rates. We're in an industry where bad news is good news for us. So when the economy is doing bad, that's when rates get good and we do well. So hopefully we're starting to see that those numbers on the job side are getting a little softer, less jobs being created, unemployment rate is going up a little bit. But right now we have the problem of the government being shut down. So we're not getting the reports. We haven't seen the biggest report that comes out at the beginning of every month, the Bureau of Labor Statistics report that shows or tends to show what the market is doing. The problem with that is it's been overinflated the last 4 times they've reported it, to where the following month they're saying, oh, we were off by 100,000 jobs. It's actually 100,000 less were created. So with that false information going out, markets make movements based on that. They're still thinking everything is strong, when I don't believe that. I think we're going to see more job losses. We're going to see things slow. So we're finally seeing that rates are going to come down. Inflation is under control. Just that job thing and maybe tariffs a little bit, because they're not quite sure how that plays into the picture yet. But they will be coming down now, finally. Hopefully, unless bar some crazy thing happening where the economy just takes off, but I don't see that present. So
Awesome. Thanks,
for
Chris.
understanding.
What type of mortgage loans are available for borrowers who do not qualify based on Fannie Mae and Freddie Mac guidelines, Judy?
So when I started this business, probably 80 to 90% of people goes on Fannie and Freddie's guideline, which is FODA, the tax return. But being the fact that the house has gone so high, the loan amount so high, it's very hard for someone who is on FODA and the tax return and W-2 to qualify. So non-QM became quite popular. I would say in our office, about 50% now, or 60 are non-QM versus FODA. So what a non-QM, that means they don't have to go with Fannie and Freddie's guideline. So the buyer, the tax return doesn't look good, W-2 doesn't look good. They can do no income, no job loan. They can do profit and loss for self-employed. They can do ESCR for investment property where your income doesn't need to be good to qualify, it's the profit. And then they can also do 12-month bank statement for self-employed. So those are the options for people who don't qualify for FODA or Fannie and Freddie.
Awesome. Thanks, Judy. All right, Cosmo. The market is competitive. Buyers need to stand out. How can lenders help get offers accepted?
Okay, so when you do get those buyers, right, just like everyone's talking about right now, it is a tough market, sales are down. I think it's more important than ever, right, to really make sure our buyers stand out. So whenever you refer me a client, it's like pulling teeth sometimes, right? I ask them for their pay stubs, their W-2s, you know, if they're self-employed, their tax returns, usually two tax returns. We find a program that's best for them. And then from there, I talk with you guys, the real estate agent, right? And I say, hey, based on this program, we could close this deal in 15 days. Some other deals are special programs. They require 30 days. But once we have that agreement on contingencies, on appraisal contingency, on loan contingency, that just makes you feel so much more confident now, right? Talking to a lender about that, because now you could offer knowing what the lender could back up. Another thing I do is send a pre-approval package. And I'm sure you guys lender, I hope they don't do this, they should do it, right? So I sent proof of funds. I send the DU, they've been underwritten by the bank. I send the pre-approval letter and anything else that is gonna help the package, right? So when you guys make your offer, I always request that you guys CC me on all offers. You make your offer, I call the listing agent personally. Hey, I'm Cosmo Sanchez. I'm representing Mr. Gonzalez on this file. Do you have any questions in regards to their qualifications? And usually it is always no, because everything that they may have want to ask me, they already see in the pre-approval package, right? And then if they may have another question, then I answer it. But I think a lot of this is it sounds pretty elementary, but you will be surprised how many people do it and how far does it go. Why do I think it works really well? Because when you're, you know, someone just mentioned 21 offers, right? You submit your application, your offer, you're just another face. But when they see your beautiful offer written, when they see the buyer offer, and then they meet the lender, all these faces, all these touches, now the application is so much more.
Awesome. Thanks, Cosmo. All right, Mario. Is a reverse mortgage easier to qualify for than a regular loan?
Yes, reverse mortgages are very easier to qualify. They're based on age and equity. That's it. There's no tax returns. There's not even credit. They do look at the credit just to make sure that there are no tax liens or anything, because they will pay that off. But it's age and equity. Basically, the older you are, the more you're gonna get. So if you're 70, 90 years old, you're gonna get a lot more than somebody just got it at 62. However, I can tell you from my experience, there's people out there 75, they refinanced when they were 60, and so you realize you're gonna be 90 years old making a mortgage payment at $2,000 a month. Like, remember what I said a little while ago? You're gonna pay until you die. And most likely, and some of them, you figure 2,000 a month, it's all numbers. That's 24,000 a year. Imagine if you eliminate that payment, use that money for your life. You know, the best thing money can buy is financial freedom. That's Rob Berger. I didn't make that up. I even told that to David Tran, sell more tickets then. Anyway, so that's the real purpose of a reverse mortgage. It eliminates mortgage payments, stretch retirement savings, preserve your investment portfolio, delay Social Security for some of those. So it has some strategic options that it can be used. It's not only, oh, it's a loan, no, it's a strategic movement. That's why it's a retirement tool. So that's basically what I wanted to say.
Awesome. Thanks,
Easier
Mario.
to qualify.
Perfect. All right. So Chris, how much of a down payment do you need to get a home loan to buy your first home?
Okay, so the reason I posed this question is because I know that the perception out there is very different. I just checked with ChatGPT on what do people think you need as a down payment, and Lending Tree found that 34% of Americans believe you need 20% down. Among those who've never bought a home before, 41% believe you need 20% down. And other surveys like from Rocket Mortgage said 61% of respondents believe you need 10 to 20% down to buy. So that is not the case. There are programs, if you're a veteran, of course, it's a zero down program, so you can buy with no money down. If you're buying conventionally, the minimum down payment is typically 3%. But if you are a first-time buyer and can fit a first-time buyer program, there's many that will fund that 3%. So then you're financing 100% of the price. I don't see too many programs any longer that will cover all the closing costs as well. So you have to have some skin in the game or have a seller who's willing to pay some closing. But as little as 3% on conventional, 5% if it's a high balance. So if you get above the 806,500 loan amount, you do have to put a couple percent more down. FHA is 3.5%, and that's whether it's a high balance loan for $1 million or it's a 700,000 price. 3.5% down is the standard down payment percentage. So there's a huge misconception out there of needing 20%. So definitely talk to people, let them know that is not the case. They don't even have to have the down physically. You can get it from a program if they fit. So just keep in mind, it can be as little as 0, 3, 3.5, or 5% down, and you can get someone in.
Awesome. Thanks, Chris. Okay, so Judy, what types of mortgage loans are available for foreigners to buy real estate in the US?
Basically, two types. They're all non-QM, of course. You cannot do foreigner under Freddie and Fannie. Usually, there's no income, no credit, because they don't have verified income here, then they have no credit. That's for their primary home. They can do that. They usually need more down payment, 20%, 30%, or 40%, because they're foreigners. Also, you can buy DSCR, but that's investment property, because they're foreigners. They can buy property here for investment. They can buy, San Bernardino, San Gabriel. So those are the two types that are good for foreigners.
Awesome. Thanks. Thanks, Judy. Okay, Cosmo, with home prices still rising and rates not dropping as much as we hoped, is it a good time to buy?
Yeah, so you guys hear about these people who are like, they win like Nobel Peace Prize for like saving the rainforest or saving some type of animal that's about to go extinct, right? I feel like we're doing that with the middle class right now, right? Helping people buy homes. Why is that? Because groceries, gas, cars, everything you could imagine, suits, like the suit that I have on, everything, your shoes, whatever you're looking at, right? Inflation is so high right now. And is it getting any better? We all know the answer to that, right? No. That person that waited, that I talked to 10 years ago or 5 years ago, hey, John, let me help you, qualify for a home, right? That person's out of the market now. They just barely qualified, they're gone now, right? So if your clients, just like Chris said earlier, your clients are thinking, and Judy as well, that they should wait to buy the home, well, we know the answer to that. So as much as we could persuade them that that's not the right choice to make, we need to do that, right?
Awesome. Thanks. Thanks, Cosmo. Okay, Mario, in a reverse mortgage. All right. Can a reverse mortgage be used to purchase a home?
I will let, by the way, Cosmo, that's why you're still wearing your 10-year-old shirt.
Wait, ask him to give you that.
But the answer to that is
What
yes.
numbers?
Actually, people don't realize this. Some people will sell their $2 million home. Either they can downsize or upgrade, because how much down? If let's say that they put down 50% down, they can buy double of what they got with no mortgage payments and keep the rest of their money for their retirement. You see, that becomes a strategy instead of putting all of the money and don't have anything. The next thing that I see from a lot of my clients is health. Trust me, I think all of us, like what you were saying, we have to be healthy, because I can tell you, I have clients over here in San Gabriel, they gotta have $1 million. By the way, they say, how much you need? 100,000 now, 400,000 in a line of credit. Do you understand that the line of credit in a reverse mortgage grows at 6% per year? So they give you all of their numbers. In 10 years, it's no longer 400, it's almost 500. And you can use that money for anything. You know how much I was going back to the health. They needed a caregiver. You know how much the caregivers are costing now in our days? 5,000 to 10,000 a month. A month, 5,000. So a lot of times they say, oh, I want to stay in my home. I said, why don't you sell and go to a living care facility? No, I died. This is what I said. Really? That's what I hear. So I said, okay. So, but now they're happy because they have the caregiver 24/7. The husband, he said, well, I'm 79. If she falls, I cannot pick her up. It's a 911 call. I hear that. So this is what is happening out there. And, that really helps them to do what they want to do as they get older. So take care of your health. That's a big one out there because it's very, very, very expensive. So yes, you can purchase a home, you can downsize, or you can upgrade with a reverse mortgage, and it qualifies a lot easier. That's really the answer to that one.
Awesome. Thanks, Mario. All right, Chris, what are some things you can do to raise your credit score?
Okay, so there's quite a few things. We're short on time, I know, so I'll try and keep it to just a few. The obvious one is, of course, paying on time. You get one 30-day late and it's recent, your score will drop sometimes 50 to 70 points. It can be, depending on what that late was on a car payment. Oh, you just devastated your score. Mortgage payment, forget about it. It gets really bad quick. So pay on time. Secondly, keep your utilization low, meaning if you can keep your balances or tell your clients to keep their balances under 30% of the limit, and ideally 10% is the true number that they'll get the best scoring, that's hugely important. So either they can request, possibly if their income is strong, to increase the credit limit. That would also increase that spread of more available credit, and that'll increase their score. And also don't have your clients close old credit cards. Even if they don't use them much, have them use them once in a while and just small amount, pay them off. If you don't use one for like 4 months, some creditors just close it on you. So that would then take away from that available credit, which is like 30% of your score. So those two things are important. Collections, don't just pay a collection without talking to the lender first. It often worsens your score because it now just updates the date of that 7-year-old collection to like it was yesterday, even though it's showing paid. Not too helpful unless it's medical. Medical, they do have to remove immediately or usually within 30 days once
68.
That's taken off. And then one other thing that is they haven't figured a way not to be able to allow us to do this yet, but if you need a quick increase in the score and you have a good family member that has established credit, had it for a long time, has a low balance on a card with a high limit, if they'll add you as an authorized user, you will get immediate points. Like within a week, your score is going to be higher. Some lenders have programs that say, oh, if it's an authorized user account, you got to get it out of there, or we're not counting it. But that's very few. They haven't figured out how not to count that in the scoring. So add on to your parents' account or a good friend or whoever that is willing to do it. That could possibly help you. So,
All right. Do we have time for the last three? No. Or one more? 1 minute. All right, 1 minute. Be quick. All right. How can a buyer get a purchase loan when he or she cannot qualify by him or herself, Judy?
So we find that more and more common that two generations are buying together. There was a parents and an adult child. You can add people, you can add cousins, brothers, sister, parents, uncle, and they don't have to be occupied. They could be non-occupied co-borrower.
Perfect.
You need somebody to go on. They have to have money and good credit.
All right, Cosmo, last one. What are some loan programs that buyers can take advantage of?
Okay, so I like to tell everybody, we all saw Coca-Cola. All these programs, they're similar. Did you catch that? They're very similar, right? What makes a difference is that people who care about your business are gonna pick up your call, get back to you when they need to get back to you. I know that every lender here does an amazing job.
Love it, Cosmo. All right, last one, Mario. Do reverse mortgages offer protection for borrowers?
Yes, there is a lot of protection. What happens when they passed away? Who gets their equity? A lot, the myths out there, they said, oh, the bank is gonna take over. The bank never takes over. There is no mortgage payments. They do have to pay their property taxes and insurance because there is no mortgage payment. All of that is eliminated. But the property taxes, I don't care if you have your house paid off, you still have to pay them, right? So that's the only thing that they want to make sure, but there are a lot of protections. and it's a non-recourse loan. What that means is that even if the market goes down and you owe more, who do they go after? You know who? Nobody. They said, that's it. That's the protection. That's a big protection.
All right, thanks, Mario, and let's give a round of applause for our panelists. Our amazing members. All right, the last thing I'm gonna say is thank you all for being here and listening to our amazing affiliates. It's the last one of the year. I know we're all crying. I hope everyone has a fantastic rest of the year. And I also want to say I'm also celebrating my birthday on Saturday. So for all the Scorpios out there, it's our season.
All right, let's please give them another round of applause. Thank you for being here with us. All right, on behalf of the West San Gabriel Valley Realtors, I would like to thank again to our guest speakers, the panelists, and also our Mr. Brendan Silvestri for a great and informative presentation. So please join us next week, October 30th, as membership special event committee will be hosting our Halloween celebration. Please dress to impress in their Halloween costume with the costume contest. Breakfast will begin at 8:30. And it is also my last program for this month. Next month, I will have Ms. Wendy Zan stepping in. Thank you very much. The meeting is now adjourned.